Hi, this is Chris Morgan from Mount Airy Technologies. This is a continuation video from prior where we talked about why it's entirely too hard, costly, and time-consuming to change investment accounting systems. We covered who we are in the last video, so we're not going to spend a whole lot of time, but just as a reminder, my name is Chris Morgan, founder and CEO of Mount Airy Technologies. I've spent the vast majority of my career implementing investment accounting systems. So this video details the steps to actually implement an investment accounting system. We'll go through all of the detailed steps as opposed to the last video where we just highlighted the areas where you could speed up. Alright, so let's get into it. So just as a reminder, this diagram is one that's laid out into three areas: the planning phase, the execution phase, and what we've framed as go live. Within that, we've got both the business tasks detailed as well as the IT tasks. You'll also notice that we have an area around change management as well as evaluation and feedback loop that's necessary as a part of these projects. So as a part of this video, we're going to go through each of those steps in detail to be able to give you a preview for what you can encounter, what you will encounter when you implement one of these systems. Change management is one of the most often overlooked areas of most projects, let alone investment accounting projects. What you're really trying to accomplish within the change management component of your project is to constantly be communicating out to your organization. And whether that is the entire company, part of the investment accounting group, whatever the case may be, it's really important to make sure that people understand what it is that you're trying to do and why it is you're trying to do that, right? And in order to do this successfully, you really need to make sure that you've got your leadership team out front and center and talking and communicating with areas of the organization that are being subject to change. People don't like change, so we need to make sure that they understand why we're doing the things that we're doing, and they have an element of security around what it's going to mean for them and what that means for them for the future. You want to make sure that you're dispelling any disinformation or rumors that may be persisting. You want to get out in front of those, and when they do actually occur, and they will, you want to make sure that you're able to provide enough information for people to understand that what you're saying is truth and what they're hearing wasn't the actual truth. One of the best ways to understand what people are thinking, both in terms of the project as well as the change itself, and this ties into the change management process, is to constantly be soliciting input from folks. Understanding what it is that they're hearing, what is it that they're seeing in the project, and what is it that they're feeling. Is there anxiety there that perhaps you need to address? Are there information gaps that you need to close? You won't know this unless you're constantly going back and you're asking people for feedback, asking people to tell you what they think about the project and how it's been going. This will not only help you with the change management aspects of your project, but it will also help you ensure that your project itself stays on track and that all the right pieces are being put together. Okay, so let's talk about the business specific tasks. What is it that the business organization needs to do in order to make one of these projects happen? Well, it really starts with being able to make sure that you've got a project to begin with, right? So you need to make sure that you've got appropriate budget. Now, this tends to be a pretty big hurdle. The back office investment accounting functions have long been seen as a cost center as opposed to a revenue generation group, right? Obtaining budget can be difficult. You need to make the case. You need to make the business case for your organization so that they're willing to spend the money. As we talked about in the prior video, there's not a small spend in order to replace one of these systems. Here are a few tips, right? Go out, make sure that you're documenting as many things as you can about your current environment. What are the gaps? What is the impact of those functionality gaps, those system gaps on your organization? What does it mean? Can you translate that into an hourly spend that you're wasting or the organization is wasting? What are the risks associated with the gaps that you've identified? Perhaps you're closing those gaps with manual processes, right? Really good, knowledgeable staff that for years has been plugging holes but perhaps unbeknownst to them has been raising other risks or exposing the organization to other risks, let alone those that are specific to the regulatory risks out there today. What is it that your peers are doing in the industry? What systems are they using? What are they doing? What's the size of their team? How similar or dissimilar are they from you? And how do you view them relative to you? Are they a competitor? Are they a peer? Should they look similar to you? And if they should, why don't they? You'll get all of this information just by having conversations with your peers at competitive firms or peer firms. Talk about what vendors they're using. How is it that they're organized? What systems are they leveraging in order to get the same functions done that you are? And then finally, reach out to some consultants in this space. These folks have been implementing systems for years, and they have a lot of really current information about trends that are happening within this area, and they can really be helpful. And certainly they're willing to talk to you at no cost in most cases on the prospects that perhaps you'll leverage them in the future should you move down a path of one of these projects. And finally, you want to make sure, after all of you gathered up all of that documentation, you want to make sure that you're able to identify the areas where you can either reduce the most risk or you can save the most money for the organization. That is the core of the business case, which ultimately will get you the budget that you need in order to actually replace one of these systems. Once you've got the budget and you got approval to move down the path, you traditionally will move to an RFI or an RFP process. Right? You want to make sure that you go through a rigorous approach for selecting your system, not just something where it's the hottest new system and so we just go with the one name that we know. You really should be going out and soliciting as many vendors as possible in this process. Typically we'll see 6 to 12 is the number that will normally be solicited as a part of a normal RFI or RFP process. Once you've gone through and you've solicited input from those vendors with what traditionally or typically will be hundreds of questions about the capabilities of their systems, you then receive that information back and you want to go through a process of scoring all of those RFIs to get to a place where you can understand the landscape and you can understand which vendors might be better than others. That should give you pretty good rank scoring. And that rank scoring ultimately gets you to a place where you can solicit a subset of those vendors to actually do demos for you. You bring them in. And normally we'll bring in 3 or 4 vendors for a system demo so that you can walk through. It's a very time-consuming process to do right, and to do more than 3 or 4 really starts to get pretty onerous on the folks that would need to participate in that process. But along the way, you want to make sure again that you're scoring in a reasonable way, and one that isn't subjective, or certainly with as little subjectivity as possible. Once you've gone through and you've been able to score the demos and the capabilities of the vendors as you've actually seen them, that will actually get you to the place where you know who your finalist or your finalists are. And it's at that point where you actually take that finalist through the procurement process. In some cases, you take 2 finalists through the procurement process to see where everything falls. Okay, so you've gone through the RFI and the RFP process, you've chosen your system, and you're going through the procurement process, or you completed the procurement process, and now you need to figure out how are you actually going to approach the project. And there are a number of different options. None of them necessarily is better than the other, but you do want to choose an approach that works best for your organization and based on the methods of the vendor that you've selected. All vendors implement a little bit differently, and that will have an impact on how you should consider your approach to the project. But some of the things you need to be thinking about is whether or not you're going to deal with a phased approach or a big bang. Are you going to make everything live at the same time, go with all of your accounts, all of your portfolios in a all at once big bang sort of approach? Or are you going to do a little bit at a time and sort of phase things in? And then if you're thinking about a more phased approach, which is what often consultants might recommend, you're going to take a look at your options for actually phasing. In a lot of cases, people will do this by asset class, but it's not unheard of for them to choose a group of clients and do a set of clients first, and then move on to a new set of clients. Get them all done in their entirety. All of these various options have different weights to them, right? Different reasons for approaching it in this way. You might deal with specific portfolio groupings, or frankly, if you're dealing with a multiple replacement, you're replacing multiple accounting systems with a new single accounting system, you might opt to move everything off of the first platform before you move on to the second platform. You need to make sure also that you've got a firm grasp on what your operating model is going to look like. Chances are really good that you've operated over the last many years or decades in an environment that doesn't make a whole lot of sense for your business today. And oftentimes we see clients get mired in the organizational structure. The operating model isn't meant to address the organizational structure out of the gate. The operating model really is meant to look at things as far as the work that needs to be done. What are all the functions that need to take place? What are all the processes that are done in order to actually provide a portfolio to your clients? In this case, we're talking about the investment accounting platform. What are all of the activities and events that must take place? If you can look at it objectively, all of the work that needs to be done within the investment accounting world, you can get to a place where you can start to isolate areas perhaps where one or more groups within your company are perhaps performing the same function, or perhaps areas that could be consolidated or streamlined or made better. The real benefit of looking at your operating model is to make sure that before the vendor walks in the door, you've thought about how it is that this work needs to get done. You've thought about the existing processes, and by virtue of that, you'll also have gleaned some insights into those specific areas that perhaps could gain more efficiencies versus others. Once you've gotten through all of this, chances are really good you're very well engaged now with the vendor of your investment accounting platform, and you need to start looking at configuring the system. Now, in virtually every case, your vendor is going to help take you through the process of this configuration, but these configurations really need to strike a balance between the unique needs of your organization and standards across the industry. Now, some of the better vendors will help you get to exactly that place, but you need to make sure that you've got a mindful eye towards that balance. Too often I've seen clients who seek to replicate their past, seek to replicate the configurations of the past, which really don't apply to the future. And in as many cases, I've seen clients that think that they're particularly unique, when in reality they're more standard in the way that they do business than they actually think. As you're going through this configuration, it's incredibly important that you're working hand in hand with your vendor to get the right configurations for your system. And this will be driven from your business requirements predominantly, and the way that you expect to conduct business going forward. Again, one of those inputs is your operating model in the previous step. This area around configuration is really the most vulnerable to miscommunication and misunderstanding. Because you use different language in a lot of cases than the vendor does, it's really important to get into the details of what you mean. Use examples when you're talking about the things that you're hoping to accomplish. Talk about specific assets, talk about specific securities, and take them through so that there is no miscommunication. Unfortunately, if you make mistakes here, either due to miscommunication, bad requirements, or something else, that really will cause incredible pain down the road, because these configurations really last the lifetime of your investment accounting implementation. Now, once your configuration is done, taking your requirements into account, you need to actually get your requirements implemented, right? So now in the configuration, you've outlined the baseline for how your system is going to look and is going to behave. You've tailored it a little bit to your specific needs and your specific requirements. Now is where really the rubber meets the road. And this is by far the longest area of the implementation that you will work through. There's all different aspects that you need to take into account, not just your accounting requirements, but your process requirements, your workflows. What are all of these going to look like? And in a lot of cases, you'll be best served by having an agile-like methodology, an iterative methodology, in order to test and understand the implications of your configurations and the implications of the requirements that you have on the system itself. Again, this is a really an extensive part of your implementation and the one that you'll take the most time with. So you need to make sure that you get it right. You need to make sure that your users are comfortable, that they've got their hands in the system, that they're able to see the outcomes and the numbers that are being generated as a result of all of the various things that are happening and going into the actual implementation of your investment accounting platform. Once you've got your requirements, you're comfortable with where they are and how they're going to be implemented, how it is you're going to do business within the new system, what your workflows ultimately look like, who's going to be involved in which areas of the business, all of this, it's time to actually convert over your data. So you need to be able to take data off of your old platform and move it onto the new platform. And one of the big challenges in converting the data is the data on the old system rarely looks like the data that needs to be in the new system. It's sort of an apples to oranges translation that needs to take place here, right? The old system operated in one way and stored data in one way, and the new system takes in data a different way and oftentimes will store it in a different way as well. So you need to make sure that you're working closely with your IT group to build out the right programs in order to move over that data. This is the starting point for your investment accounting installation. If your numbers are not right at the outset, they're never going to be right. So it's going to be really important, again, that those programs that move that data from the old platform to the new are right. And in order to do that, you're going to need to make sure that you're reconciling that data and moving through the process to ensure that you're comfortable with where things stand. You can never understate the importance of testing. And in this case, we're talking about acceptance testing. And acceptance testing is really pretty straightforward. It's the business users, the investment accountants, the operators that are going to be in the system every day, do they accept what is being provided? Is it working the way that they expect? Is the data coming in translating into the right data coming out? And it's really an end-to-end view of the system itself. At the end of the day, are your accountants happy? Are your investment operations professionals happy with the way that things are performing? This is extensive. This should be extensive, and it should involve all of the various flows of information into the investment accounting platform that you'll deal with in the future. You'll be dealing with security master data, security reference data. You'll be dealing with market data. You'll be dealing with transactions that are being processed from your portfolio management applications. All of these inputs, through the normal course of business, will generate your accounting outputs, and it's really important that before you actually move and migrate, that the users, the accountants, the investment accountants, the investment operations teams that are going to be in your investment accounting platform are happy with the results. That is what this phase is all about. Once we're through that testing phase, you get to the place where you're actually will go through a parallel process. And what the parallel processing phase is meant to do is to allow you to put the application through its paces through a normal course of business. So you're processing in the old system at the same time that you're processing in the new system. If you are in the month of January, you're processing everything for the month of January in real time as you normally would through the normal course of business in both systems, both the old system and the new system. And then you're effectively comparing the results at the end of each day, at the end of each week, at the end of the month to ensure that what you've got is either the same or is understandably close, right? So there may be processing differences between the new system and the old. Their calculations and algorithms and things might be different. At the end of the day, you need to be comfortable that the results that you're getting in the new system are close enough to the old system that they make sense. That is the goal of parallel processing. Some of the challenges that you have here is you're basically asking your investment accounting and operations teams to do double the work. It's one thing for technology to process into two different systems. That can be hard enough. But when you're talking about humans that actually have to work through processes not once, but twice, and do it both in new and in old, that can burn them out pretty quickly. When choosing the amount of time that you're going to spend actually in parallel processing, you need to take burnout into consideration. You need to think about what it is you're asking those folks to do and for how long you're asking them to do it. And then finally, when everything is good and everyone is happy with the outcomes of the parallel process, you've been able to reconcile old system to new, you understand your differences, you know that you've got a good set of outputs within your new investment accounting system, that's at the point where you cut over to the new system. It's easy to think that, well, we will just simply start on the new system and drop the old. And from a business perspective, that's mostly true. You simply you continue to do work within the new system and you stop the manual and other processing that you're doing in the old system. With enough preparation and a little bit of luck, you won't ever have to worry about going to that old system again. But just in case, we want to make sure that the IT organizations continue to push data into that old platform for the next, say, 30 days or so, just to make sure that in the event that we have some really serious disaster or serious problem rears its head after we've cut over, that we do have the opportunity to move back. And we do want to make sure that things like our business continuity planning, our BCP site, has the ability to actually deal with the new system as well. And we want to make sure that that's tested prior to us actually cutting over to the new system. And certainly that's just one of many contingencies that we'll want to have in place before we actually flip the switch to move to the new system as the official book of record. Let's talk about the IT tasks now. What needs to be accomplished on the IT side of things? Well, while the business has an approach to the project and largely will be able to drive their approach based on the requirements and their comfort level and risk profile, the IT organization needs to set up their own approach, particularly around how interfaces, conversion programs, and other areas will actually be developed. And so it's paramount that they go through this exercise as well, and they're doing that approach, planning that approach in conjunction with the business and their preferred methods as well. Once they've figured out the approach, it's important to make sure that you have fleshed out your systems design. What is your actual systems architecture going to look like? Some organizations are already have an established systems architectures, but others need to reimagine it in the new environment. And certainly there's work to be done here in order to make sure that your investment accounting platform in its new form, in its new state, fits into the broader view, the broader environment as well. You need to go through an exercise to make sure that system fits in neatly into either your existing design, or you need to make sure that you've developed a new design that makes sense for the new environment and the future that you envision. You then get into actually figuring out how and what interfaces get developed. So you have your systems architecture, you know how it is you want data to move across the organization. That informs your interface development. And certainly there are a number of things that you need to consider when developing those interfaces. And the first one that often comes up is whether you're going to be coupled to or decoupled from your investment accounting platform. Are you going to have an abstraction layer away from the investment accounting platform so that in the event that you need to change out interfaces, or you need to deal with changes to your investment accounting platform, you're insulated from some of those changes? heaven forbid your vendor, your investment accounting vendor, makes substantial changes to the platform, you don't want that to impact too much of your organization. You need to be thinking about whether you're dealing with messaging queues or you're going to deal with files moving across your organization. A lot of that will have been fleshed out through your systems architecture and design, but you need to also determine how you're going to perform ETL or as it's sometimes called now, ELT. So extract, translate, and load, or extract, load, and translate. What tools are you going to use? Are you going to use any off-the-shelf tools to do those transformations, or are you building something custom? And certainly, if you're going to build something custom, we would expect that you'd have a good reason for doing that. You also need to be thinking about the types of outputs that you're putting out as well. And some of the common ones are listed here on this slide, not the least of which the newer ones, which are JSON and XML. And then certainly you can't underestimate the proprietary layouts of the investment accounting platform provider as well. You also need to develop conversion programs, and you can do these in lockstep and in parallel with developing your interfaces. This is not necessarily something that has to happen in sequence. And certainly developing your data conversion programs is an early aspect of any project to ensure that you can actually move that data, old data, to the new and perform some levels of testing. What is it that ultimately you need to bring over? Well, you need to make sure that you're bringing over your current positions. Now, the question is going to become whether or not you need to deal with any level of history, or you can simply take your positions as of a point in time. Your needs will dictate what that approach is, but it does have a fairly substantial impact on the conversion programs that you're developing and how many of them that you need. Need to make sure that you understand from your requirements whether you need lot level positions or not. That too will have an impact. When are you going to convert? Which data sets are you going to convert over? Do you understand what that actually looks like? And what are the implications downstream to your data stores and ultimately to reporting? Have you thought those through? Have you worked with your business partners to understand the reporting impacts of the way that you're actually performing these data conversions? And then certainly, along with your positions, you need to make sure that all the supporting data is there for you as well, like your security master data, pricing data, and others. You'll need to develop reconciliations as well. Predominantly, this is to make sure that your data conversion programs are working properly and you can tie your old to the new. But there's also the development of reconciliations in an ongoing way as well. The inputs into the reconciliations that you're doing today are likely to change with the new system. You need to think about what tools you're going to leverage for your reconciliations. Some of these vendor products, investment accounting platforms, have built-in reconciliations or areas where they will help you reconcile data, and others have lesser capabilities depending on the system that you chose. But here are some of the suggested reconciliations that you should be going through, whether you're talking about on an ongoing basis or as a part of your data conversion. You need to make sure that your positions are being reconciled. Do your security holdings tie out? And that's really across not just your shares or your par values, but your cost values, your book values, and your market values. You might need, if you're an insurance company, you might need to deal with carry value as well. You need to make sure that your amortization and your accretion tie out if you're a fixed income shop, or deal with assets that actually amortize or accrete. You may need to deal with general ledger reconciliations as well if you're feeding into a general ledger. Your investment accounting platform is providing you with a subledger, but you need to make sure that what's being sent and received by the general ledger actually makes sense and ties out. Otherwise, you're going to run into trouble. You may need to deal with regulatory reports as well. Again, insurance companies have Schedule D to deal with, and other types of businesses have other regulatory requirements that they need to meet as well. And then you certainly want to make sure that some of the underlying data within the new system tie out to the data that was actually sent as well. So you may choose to develop reconciliations around that market data too. And then once all of your programs are developed and you think that you've got everything that you need, you really should perform an end-to-end integration test. And so what does that mean? It means that you take all of your interfaces and you run them through as you would through the course of a normal day. You allow those data feeds to hit your investment accounting platform, and you validate that what you sent in was what was received and it was interpreted properly by the investment accounting platform. You process the data outbound from the investment accounting platform to all of your downstream systems, and you perform similar checks. Is the data good in the downstream systems that you sent it to? Did it receive what you expected? Without this type of end-to-end testing, you are very, very likely to experience problems that could otherwise have been mitigated. Really important to not just test these interfaces and conversion programs and reconciliations in isolation. You really should check them in their entirety through these various points that they actually hit. So not just as they're hitting the accounting platform, but the entire data flow into the accounting platform and then down to the downstream systems. Once you're in go live phase, you need to deal with support and changes. So how is it that you're actually going to understand the issues that are being identified by the business users or frankly technical users as they encounter issues in processing data through those systems or in schedulers or other tools that you're using to make all of this talk to each other? What is the alert mechanism once those issues are identified? How are those changes getting made, and in what time frames? Do you have the resources available to handle the changes to those programs? Are they allocated to have that time? Then you need to make sure, obviously, that the changes that they're making are tested, and whether that is just a straight unit test within the IT organization or deals with user acceptance testing, as I would expect that it would, you need to make sure that that cycle is complete and that the changes that are being put in do not break anything else. Finally, from an IT perspective, the final part of Go Live is really around the retirement of the old system or systems. It's one thing to retire the old investment accounting platform and turn that off and then never have to deal with it again. It's another to deal with all the systems that surround it. And certainly, even when it comes to the investment accounting platform, it's not necessarily as straightforward as simply turning the old one off. Often you need to think about how you decommission the hardware that software is on. You need to think about the data from that old system and what the requirements are for archiving that data. How long do you need to hold on to it? How much of that data is important? What types of data should you be storing? Where are you going to store that data? And again, for what period of time? And then certainly being able to either redeploy hardware to other parts of the organization or retire that hardware itself, making sure that hardware has been properly cleaned to mitigate any security concerns that you might have as well. Again, a very involved process around that retirement, and often an overlooked component, certainly for the amount of effort to do it right. So because the areas where we can speed up are really more IT focused than anything else, although we did this in the prior video, I'm going to take you through this again just to highlight the importance of in the areas where we can speed time up. We're really talking about the development of interfaces, conversion programs, and reconciliations, as well as the ongoing support and changes. These areas really shouldn't be underestimated for the amount of time that you can save. If you're an IT professional, you can certainly appreciate the time and effort and care that goes into building these types of interfaces and programs from scratch. And certainly you'd want to make sure that you're doing the most that you can with the time and the resources that you have allocated. Now, you may be operating within a waterfall methodology for your development, or you may be dealing with an agile or an agile-like method. Regardless of that, you're familiar with interacting with your business partners, via a business analyst who's able to translate those requirements for those to be provided to the developers and IT. Data conversion programs, and in a moment we'll get into the interfaces themselves. Again, these programs are not optional. These are mandatory and absolutely necessary for the success of the project. Unfortunately, all of the time and effort that you'll spend in developing these programs tends to be thrown away, and that's unfortunate. But the reality is, to migrate data off of an old platform and onto the new platform often is a very specific set of code, is a very specific set of programs in order to do that, and they often can't be leveraged again. But they do, in order to develop those programs, require really an understanding of a number of things. Part of that is the investment data that you're dealing with. Part of it is the proprietary layouts of the vendor of the investment accounting platform that you've purchased. And then really making sure that you're able to do that in a way and develop these programs in a way that you can get the same results time and time again, because your business partners are ultimately going to want to run through probably a half a dozen or more tests to ensure that they're working. We talked through an example in the prior video, and I'll just very quickly take you through some of the highlights here. It's one thing to be able to develop these programs. It's another to make sure that you've got access to the data. So one of the first things you'll need to make sure that you do prior to even starting to write a line of code is to make sure that you've got somebody who can pull the old data off of the old platform in a way that's meaningful for you and that you can use it. You also need to make sure that you have a firm understanding of the proprietary layouts of the investment accounting system that you have. These things aren't always straightforward. Sometimes they'll be in an XML-like format or a JSON format or some sort of delimited file format historically. But to generate those types of outputs is one thing. To be able to generate the values within those layouts can often be a much bigger challenge. Make sure that the business analysts and the developers are working very well together. Please make sure that you've documented, or your business analyst has fully documented for the developer what is needed. If you have misses between the documentation from the business analyst, communication with the business analyst and the developer, you're going to run into some significant challenges, and those challenges will prolong the work that you have to do. Let's talk a little bit about interfaces now as well. They won't be dissimilar from your conversion programs, but fortunately these interfaces are ones by design and definition will live on. You need to make sure that you've thought through this decoupling versus direct link to your investment accounting platform and what your strategy is. That will drive a lot of the development that you're doing. You also need to take a look at the interfaces that the investment accounting provider provides, and that may factor into your decoupling strategy or your choice to not decouple from your investment accounting platform. You need to make sure you've defined what your preferred method of connection is, and that might be a balance between what you want to do and what the vendor is capable of doing. But in either regard, you should make sure that you have that conversation with your vendor in the context of what and how you would like to communicate with their platform. And then finally, you need to think about whether or not you need to be concerned about data lineage and whether or not you have tools that can help you keep track of that data lineage as well. Whether it's something as simple and as straightforward as a data dictionary with some references, or something that is a little bit more robust and can provide you with some graphical representation of the data lineage itself. Some of the sample interfaces that you'll be developing are listed here, as they were in the previous presentation. There are certainly more than 6 that you're likely to encounter, as you have to deal with a lot of inbound feeds from providers of data, potentially through the implementation. And then let's not forget about the ongoing support and maintenance of these programs. So you need to make sure that you've got the budget, the resources, and the mechanisms to actually identify problems and then resolve them. There will inevitably be bugs in the programs that you develop, so you need to be prepared to make changes to those programs as quickly as possible, because most of what you'll be dealing with are production-related challenges. You need to explore your ability to simply insert the support and maintenance of that into your existing IT infrastructure, or whether something new needs to be created or handled. So in the context of being able to shorten your investment accounting project, you have some different options. You certainly can go through all of the various steps that we've talked about from an IT perspective in the areas of data conversion, interfaces, and reconciliations. But while that may provide you with shorter outcomes, it does certainly require a larger IT footprint. You're dealing with more programs and certainly more users than perhaps you're dealing with in the past. Mount Airy Technologies does provide an alternative, though, to having to develop all those programs from scratch, whether it's data conversions, whether it's reconciliations, or the interfaces themselves. And this isn't meant to be an assault on the IT organization. Frankly, it's meant to be a relief for the IT organization. We've provided business analysts with an interface and a software platform where they can do all of their work within the application and effectively build the interface in the process. Certainly there could be involvement of IT resources and those that are knowledgeable about development practices and how things are coded, but it's simply not necessary. When it comes to spending time developing these programs, you not only have a baseline and a framework within which to develop these things, and one that already understands the proprietary formats of the investment accounting providers, but when it comes to ongoing maintenance, you provide a little bit of relief to the IT organization. You no longer need to deal with monitoring and understanding all of the various changes that might be taking place within those formats. And when it comes to those smaller projects, those painful little changes, those tweaks to a transformation, we've taken the pain away from the IT organization and put it in the hands of the business analyst, who very quickly could adjust some of those programs without the need for coding changes. Ultimately, we think this will save time not only for the IT organization, but also for the business, and certainly will take a lot of the little isolated challenges and pains that both of you are dealing with and make things just a little bit easier. Again, this presentation was for investment accounting and related IT functions, those executives who are contemplating a change in platform or a change in system, and really is meant for those who are looking to better position your firm or simply reduce the risks or costs associated with operating in today's environment. There are many benefits to using Emissary. I've articulated a few. Certainly the ability to save money, to save time, and to deal with fewer headaches from an ongoing maintenance perspective. Many features. We're certainly happy to go through some of them with you in a related conversation. Please feel free to reach out to us. Book some time with us. You can go to this direct link to directly book time on our calendar to speak with us, or you can reach out either to me personally via the email address here, or you can reach us at our office number also on this slide.